Global markets are heating up in icy Davos. The big worry is, can India survive this big fall? I've got with me a voice which is closely connected to the Indian economy and has been a long time key and acute investor as well as outspoken person on the subject. Uday Kotak, great to have you on NDTV.
Great.
But two different stories are they coming up here on India being the shining star in BRICS, the only eye standing and shining, and then the reality which seems to suggest that India is going to suffer as well.
No, the sense I have is India will suffer less than the rest of the world. And India has got greater resilience because of being on the positive side of the commodity cycle. Having said that, when there is a cyclone, volatility hits everybody. So that's also a part of the game. Therefore, we will see some turbulence, but the ability to withstand that turbulence and be able to build a stable and a sustainable economy is a huge opportunity for India at this stage.
So I know you tweeted this a couple of days ago saying 2008, the first shoe in the US dropped. In 2016, the Chinese shoe has dropped.
Yeah.
And now it is important to see where India can fill those shoes and really walk in them.
Yeah, India has got to be clear about wanting to make sure that it gets into shoes which fit it. We should not at the same time try and be in shoes which are too big for us. But focus on getting the shoes which fit us and build on our strengths. We have got a hugely positive commodity cycle. There is global excess capacity in everything. If ever there's a time to build India and its infrastructure, it is now.
But the markets are at a 20-month low. You've got all the pre-Modi momentum or post-Modi momentum all washed away. And people are saying, is that magical influence now there, or does something need to be changed? What is your opinion?
I think it's less to do with the politics of Indian government, more to do with new levels in the context of the global situation. And India actually, I feel that fundamentally, we may have some more pain left, but not dramatic. And we are beginning to see in the next few hundred points a fundamental value coming to the fore.
So where do you see levels for the Nifty?
I mean, when I talk to our research analysts from the equity side, their view is that 2017 March, the Nifty earnings 460 to 470 rupees, take a PE of 15. That is where they think fundamental value is there, which takes you to a number of around 7,000, where fundamental value begins to come in. But markets have an ability of overreacting above and below the fundamental value. We saw Nifty at close to 9,000 as well.
So downside right now, according to the fundamental value, is fairly limited.
Correct. At fair value, I think we're getting a reasonable fundamental value around the 7,000 mark. But watch out for earnings themselves. If the world changes, the estimates on earnings can also go up and down.
Right, and that's also a key problem because corporate India tells me that 2016 is looking bleak. Exports, obviously, the big worry. 13 months, we've seen them negatively come down, and you've got them at minus 5%. Sales is flat, profit is weak. Companies which have leveraged themselves highly are asking constantly the Reserve Bank of India to make that announcement for a rate cut, which Governor Rajan doesn't seem to be wanting to do.
I think divided into two parts. First of all, in times of a broadly global deflationary environment, excessive leverage hurts you very badly. And that's what is happening to quite a few Indian corporates. And on interest rates, I think we've seen 125 basis drop by the RBI. We would also like to see some cut in small savings rates from the government as well.
So you're hoping that might happen?
I hope that happens either now or at the budget time.
So Governor Rajan made some interesting statements here, yesterday when he's saying that the asset prices are divorced from reality. And he's saying that there is a problem in what central bankers can do. Because post-2008, there was this massive amount of stimulus which completely changed how you value real assets. So are we looking at this make-believe world? Or are you fairly confident that we can see rationality?
I think the trouble is most of the global policymakers do not seem to have a good answer to get out of a make-believe world. Therefore, moment they try to get out of the make-believe world back to reality, we seem to be getting back to a need for getting into the make-believe world. Now, today I believe Mario Draghi is talking about doing what it takes on monetary policy. Let's see, because of all this, how Janet Yellen responds to further rate hikes, if any. So the ability of policymakers globally to get out of the make-believe world is part of the problem.
Do you think Janet Yellen might not do the 3 rate hikes this year, which was expected, is completely off the table? How much is likely, or possibly none at all?
I think if there's one thing about the US, they will watch data.
Okay.
And go by the data. But if
But
they
US
have
data is looking okay.
if the dollar continues to strengthen, it's bound to hurt US manufacturing. So you've got to be careful about that in terms of their ability to hike interest rates and be able to sustain their exports and trade with such a strong dollar. I understand international trade is not a very large part of US GDP, but it still can become a larger part if the currency is so much in favor of exporters from the rest of the world.
What is your sense about the yuan and China? Because this exporting of deflation to the entire world is going to hit us pretty badly.
The sense I get is, against the Chinese reported number of GDP of 6.9, the real number is more like 5. And it's a 200 basis points adjustment which China is making. And a lot of their historical GDP came out of investment. You now need a mixed change in addition to a growth change in terms of the drop. Therefore, my view is China is going to be a significant surplus supplier to the world for quite some time. It's made all its investments much earlier and now is sitting with capacity.
So it's going to obviously be a very competitive force in the global world, and it'll cut prices everywhere. So India exports are now going to get better.
But my view is this is a great time for India to use the global excess capacity and low commodity cycle to build India's infrastructure. What better time than now?
So why is the government not doing it?
I'm sure the government is thinking about it, but my frank view is don't depend on private sector, because private sector has challenges on capital. So really go after this, and this is an opportunity for either the government doing it on its own or getting global pension funds with some smart entrepreneurs in India. But we need a business model which can use this opportunity and make India.
And hoping for some announcements in the budget?
I'm sure people are looking forward to the budget, but my personal view is that in this global volatility, India needs to follow and continue to follow stable and sustainable policies both on the fiscal and the monetary side. Therefore, this is the time for India to stay its course. It is on the right side of the equation of the commodity cycle, and not panic or in any way get onto steroids.
Okay, oil, quick projection on that?
All that I'm hearing from here is oil first goes down, but the sense in Davos is end of the year stabilizes around the 40 mark.
And that's fine for India?
That's fine for India.
Absolutely. And quick question on the NPAs in banks, because that's a big problem, PSU, NPAs. How does India resolve this?
My view is it's time for us to take much more surgical view, evaluate each of the companies, fair value of those companies, and do what it takes to turn them around, take the knocks on fair value of the debt and move on. Don't postpone this, and don't get into this lend and pretend mode.
Okay, Uday Kotak, final question. You come here very often to Davos. What's the mood today if you have to put it in a rating of 1 to 10? Where would you place the pessimism level among Indian corporates?
Let me put it this way. This is a more sober Davos than normal. So you can put whatever number to it, but it is certainly a more sober Davos and circumspect, less optimistic than the Davos of 2015.
Okay, this year looks tough, but it could get better by the end of the year.
I think end of the year expectation is you first go through a trough and then come back to normalcy.
Uday Kotak, many thanks indeed.
Thank you very much.